Hi, I'm Doug Casey, and this is my guest, Peter Schiff, who's a very famous guy in this movement. And I have a series of questions that I'm going to ask Peter, and I know he's going to do a fantastic job responding to them. All right, getting right into it. Peter, the gold price, something we're both very interested in. You've been very daring, putting not only a dollar price, but a time frame for gold. And correct me if I'm wrong, $5,000 within 2 years?
Well, I don't know that I've put a time frame on it. I mean, I know gold's going a lot higher. I've been saying 5,000 for a long time. In fact, I think I was saying it when gold was still 300. So I've had this kind of number in my head that I thought gold was going to go to. I don't know how long it's going to take. I don't think it's something that's going to happen, in 10 or 20 years. I think it's something that's imminent, but it's hard to say if it's going to happen in 1 year, 2 years, 3 years. Because, in order for it to happen, I think more people are going to have to recognize what's going on. And I think history shows that assets can be mispriced for a long time. I mean, it all depends on perception. I think the average investor, certainly people who are running big money for other people, the institutional money, I think these guys are clueless with respect to the true state of the global economy, what's likely to happen to the value of the dollar and other fiat currencies, how much inflation is likely to be created. And so I don't think they perceive the real value in gold. And I think they look at the fact that gold has gone up in price, and maybe they think it's a bubble because they don't understand why it's going up. And they don't even realize that gold has really not risen much at all, because first of all, it was at a ridiculously low price when the bull market began, in 99, 2000. So it was coming from an extreme level of undervaluation, so it's really not a good comparison. But also, if you look at the cost of mining, and you are probably well aware, it's not like the mining companies are making a lot of money right now. The costs, and it's kind of ironic, it's inflation, money printing, that is driving up the cost of mining. But because so many people are convinced there's no inflation, because they believe all the government propaganda, the price of gold has simply risen to reflect the increased cost of mining. It hasn't really gained a monetary premium. People aren't worried about inflation because they don't acknowledge that it exists yet. So I think that day is still coming, and I think then you're going to see a more of a meteoric rise in the price of gold, and whether it stops at 5,000 or keeps going, all depends on how much money they create between now and then. Because we've created a lot of money, right, in the last decade, but it's nothing compared to how much money we're going to create in the coming decade.
I know. I mean, that's why God gave Ben Bernanke helicopters, as it were.
They might not be big enough, though.
No, we're going to have to use those huge twin-bladed cargo helicopters to do the job, probably. The U.S. as a political entity, what's going to go on here over the next 5 years? What's it going to be like? And are you in the school where there ought to be an escape from America plan? I mean, how do you feel about this?
Well, I've been trying to advise people to do that with their investments for some time. And I think, getting your money out of the U.S. is a lot simpler than, getting your body out and moving your life. But I think certainly people should have an escape valve for their money, their assets. I think that one of the biggest casualties, other than individual liberty, is going to be the value of the dollar. And people have to recognize that the dollar is going to lose a lot of value. Because how does the government plan on financing all of its expenditures? Because they're not going to raise taxes on middle-class Americans. That's just, no party wants to be the party that officially raises taxes. They're willing to raise taxes on the rich, which doesn't take a lot of political courage, because if you're taxing 1%, that's 1% of the vote. But I think we're already bleeding the rich enough. In fact, I think that these tax hikes on the rich are going to be counterproductive in that they might produce less tax revenue, not only from the rich, but from the people that the rich don't employ, or the businesses that they don't start because they're discouraged from doing so by the tax code, or they focus their efforts abroad rather than here in the U.S., or they start looking for tax shelters, ways to reduce their income as opposed to ways to grow their income. So that could backfire. But I think a lot of this is going to be financed by the central bank. Inflation is the tax that they're going to levy, and it's going to hit everybody But you can avoid it because inflation is a tax on your money. It's also a tax on the value of your wages. But if you have substantial financial assets, the government is basically going to confiscate the purchasing power of those assets and spend it. Spend it on services, spend it on Social Security, on national defense, on Medicare, whatever it is. And so to avoid that inflation tax, you have to avoid the currency that's being inflated, which is a dollar, and you do that by owning gold and silver. You do that by owning foreign assets, foreign stocks, foreign bonds, something that the Federal Reserve can't print. Now you have to be worried about other countries printing money, but I think the country that is most likely to print the most amount of money is the U.S. because we're the major country that's in the worst financial shape. We're completely broke. We have a $60 billion a month, a $50 billion trade deficit. So we print all this money to import things that we don't produce. And we have this entitlement society that's only getting bigger and bigger and bigger. Look at President Obama just got inaugurated for another 4 years. And if you thought the first 4 years were bad, where do you see the encore? But this is just all about something for nothing. Yeah. And the way the government can provide something for nothing is by printing. And it's really not free. It becomes very expensive. But people don't necessarily associate the rising cost of gasoline, the rising cost of food with a tax. They don't know that the government is the source of inflation.
No, they blame it on the oil company and the farmer instead of the government. I agree with absolutely everything you said, incidentally, except one thing. You mentioned the term national defense, and I don't think that the $1 trillion that the government spends every year on the military really has much to do with national defense.
Yeah, I mean, you're true. I mean, any more than the money we spend on education has to do with educating anybody. It has to do with supporting an educational bureaucracy and educational establishment. So most of the money that we spend under the guise of defense is really just military spending, and it supports the military-industrial complex. And you're right, as much as I believe that defense is the most legitimate use of federal money, and probably the sole reason that the federal government should even be levying taxes, I think that we should spend a lot less money on defense, because most of it is not defense, it's offense. And it's things that, no one's going to attack us. I mean, the whole thing is absurd that somebody would attack us. Although we might bankrupt ourselves, and then we might actually be vulnerable to attack because we won't even be able to afford to pay the army.
It's completely perverse. I know, good point. But let's talk about the real enemy. And I know that you're of the opinion, and I don't disagree with you at all, that the real danger to this country is not some guys living in caves in Afghanistan, but Ben Bernanke. I mean, would you say that he's actually the biggest danger that we have?
Well, I mean, he's a very big danger. It's hard to say whether he's the single biggest threat, because if it wasn't Bernanke, somebody else would be doing it. It's not like he's the only guy that's going to print money. I think all the central bankers are of that ilk, that Keynesian mentality, that we have to print more money, that deflation is the enemy, and that inflation is our salvation, and the government has to stimulate. But I think the Federal Reserve as an entity, and maybe Ben Bernanke personifies that. And I do think that he's the worst Fed chairman we ever had. I knew that Alan Greenspan was going to be a tough act to top, but I think Ben Bernanke has let him off the hook now, because I think you can officially say that he's the worst Fed chairman ever. But yeah, what the Fed is doing is very dangerous. And I think if we had somebody with more integrity and more understanding, if you look at, they just released the Fed minutes from the fourth quarter of 2007, and Ben Bernanke was as clueless as ever about this major collapse that was already started, and he didn't even see it coming. But if we had somebody with integrity at the Federal Reserve, who was a real independent central banker, who would just refuse to monetize these debts and would just let interest rates go up, that would force the government to make the structural reforms that are needed. But when you hear guys like Ben Bernanke actually lecture or criticize the government for its long-term deficits without understanding that he is the enabler of the process. If it wasn't for the Fed monetizing these debts, yet then he has the gall to claim that he's not monetizing the debts, when that's exactly what he's doing. He's taking debt and turning it into money. And he maintains that it's not really monetization, because he's going to reverse the process, that at some point in the future, he's going to withdraw the liquidity. And I said, there's no way he could do that.
No.
How?
No.
Who is he going to sell? If you think about this, Doug, the government right now, the deficits are over $1 trillion a year. And the Fed is monetizing 90% of it. So that means the federal government only really has to sell 100 billion, 200 billion of treasuries to private investors. Well, if you take the Fed out of it, and in fact, if the Fed tries to sell treasuries in competition with the Treasury itself, and now the government has to sell $1.5 trillion or $2 trillion, who's going to buy that?
Well,
At what price?
That leads us to the next question I was going to ask. Interest rates, the cost of money. What's your opinion on where they're going?
Well, they're going to go up. I loved your line. In fact, I've used it a couple of times. I usually remember to credit you when you describe treasuries as a return-free risk. But it's a bubble. I mean, the treasury market is a bubble. There are bond bubbles. There's a bond bubble in Japan, which incidentally might actually prick before ours. But interest rates ultimately have to collapse. Now, the thing is, the Federal Reserve realizes that they can't let that happen, because we're now so addicted to debt that we can't. The highest rate we can afford is zero. Because if the Fed lets rates go up even a little bit, I think that's going to bankrupt all these big banks that were bailed out, which incidentally are now even bigger than when they were too big to fail. They're now bigger because they were bailed out. And I don't think the federal government, think about all the talk about trying to cut the deficit just a tiny amount, which they can't even do. The national debt is financed at these ridiculously low rates. We pay about $300 billion a year right now in interest on a $16.5 trillion debt. What if in 2 or 3 years, and the debt's $20 trillion, what happens if interest rates are 5%? Well, that's $1 trillion a year in interest payments.
What happens if they go back to what they were in the early 80s? 15%.
Well, we can't even afford 5.
No.
I don't even think we can afford 3.
No.
That's the reason. I mean, why else would the Fed have interest rates still at 0? After all, according to the government, the economy is growing 2 to 3% a year. That doesn't mean interest rates should be at 0. Even if you look at the government's own inflation statistics, the CPI, which I think grossly underestimates the real effect of inflation on prices. But even the CPI says prices are rising at about 2% a year. How can interest rates be at 0? The only justification for keeping rates so low is that the Fed knows that any increase in rates will collapse this phony economy and we'll be right back in recession. So the whole thing is artificial. But at some point, the dollar has to give. You can't just keep printing money and monetizing debt and buying bonds without the dollar imploding. And I think that what's helped us recently has been the European crisis, because as people have been worried about European debt, they've been buying treasuries, even though we have more debt than Europe, because the dollar is perceived as this safe haven reserve currency. But I think as the fears are subsiding in Europe, and I don't think Europe is out of the woods, but they might be out of the woods for a year or two, maybe, and if all of a sudden those flows reverse and you start to see the dollar weakening, it has the potential to really fall. And that will put incredible pressure on the Fed to raise rates, but the Fed can't raise rates. And as investors around the world perceive that the Fed is all bark and no bite, that it's never really going to remove the liquidity because it can't, then you get a run on the dollar. And that's when now the Fed is really caught between a rock and a hard place, because now either it allows the dollar to collapse, in which case we have runaway inflation, or they aggressively raise interest rates and collapse this whole economy, because then we'll have a worse financial crisis than '08.
Well, Peter, let's call a spade a spade. We both believe that the Federal Reserve should be abolished.
Well, it depends on what you replace it with. I mean, if you just abolish it and just let the government assume the responsibilities, that's probably going to be worse than the Fed. I mean, the Fed has some pretense of being independent, even though in practice it's not. It's highly politicized, and it's hard to imagine somebody doing a worse job. But I think that they would. I would rather dramatically diminish the Fed's powers, maybe bring it back to its original mission. Back in 1913 when they first created it. This is the 100-year anniversary now of the Federal Reserve. Although I don't know what's a bad word for anniversary, because it's not. Anniversary is like a good thing.
Yes.
Yeah. But when they established the Federal Reserve, the original Federal Reserve was not allowed to buy or own U.S. Treasuries. They amended the act, and of course, Federal Reserve notes were backed 40% by gold. They were backed 100% by commercial paper. So the Fed was not an engine of inflation the way it was originally conceived. It was eventually perverted. But I would like to diminish the Fed's powers. And then maybe we could eliminate it once it was small enough. But I think right now, if you just got rid of it and just let the government, like they almost threatened to do it with this $1 trillion coin. You know, and people laughed at how crazy the idea of a $1 trillion coin is. Well, what the hell's the difference between that and what we're doing now? We're just creating money out of thin air. But that allowed, that $1 trillion coin allowed the Congress to bypass the Fed. Because now, in order to create $1 trillion, they have to borrow $1 trillion and the Fed has to buy the debt. But if they could just mint a $1 trillion coin, well, then they could just, you know, cut out the middleman.
I know. It shows that the monetary system is really descending into the area of low comedy, like the Three Stooges, where they're talking about $1 trillion coins. Yeah. It's very funny.
Although
actually,
pretty soon we might all have $1 trillion coins. We'll use it we'll put them in vending machines for a Coke.
All right. Now, one more thing. Yeah. Based on all that we've said, what should the listener do with his money? What's the wisest thing to do with your capital now in the world as it is today and as we're speaking?
Well, as I said, you want to get out of U.S. dollars. And I think people have to understand, as an investor, you know, you want to look at the world the way it's going to be, right? You want to anticipate the future, because then you can kind of anticipate revaluation of assets. You want to buy something when it's cheap and not a lot of people own it, so that you can sell it when it's expensive and everybody wants it. So you have to anticipate how things are going to change. And what I think the biggest change that is coming in the global economy is going to be a realignment of living standards in the global pecking order. America has been on the top for a long time, and for a while we deserved it. We were the wealthiest people on the earth because we were the freest people. We had limited government, and because government was small, we created a lot, we produced a lot, and we exported our products all around the world, and we had huge surpluses that we invested around the world, and we were wealthy people because we deserved it. That's not America today. Today, America's standard of living is the result of debt. We're no longer freer than a lot of other people. We have more regulations, we have higher taxes, we don't have surpluses, we have enormous deficits. We're the world's largest debtor. We owe more than all the other countries combined. We have a trade deficit with every country we trade with. We're hemorrhaging red ink. We live this phony standard of living based on the perception that we're good for our debts, which we're not. We've borrowed way more money than we can realistically repay. In fact, Congress has even said this to our creditors. We say every time, if we don't raise the debt ceiling, we're going to default, which means we can't pay our bills. Well, we can only borrow money because we can't pay, but that means the bills get bigger and bigger and bigger. So I think we're going to have a collapse in the dollar, and that's going to dramatically reduce the standard of living of Americans, because Americans are not going to be able to live beyond their means. Our consumption is going to be restricted by our production, which is restricted by big government and regulation. But when the dollar collapses, it's not doing it in a vacuum. If the dollar loses value, it's doing so relative to some other currency. So the purchasing power that we lose, somebody else gains.